Hello and welcome. You're watching Business Plus. This is a special edition as we end the year and bring you all the markets action from the last trading session of the year. It's time to reflect on the year that was. With a volatile trajectory, Nifty 50 was the second best performer in Asia at its close. The Nifty 50 index added nearly 19% this year after hitting a series of records high earlier in 2023. Indian stock markets saw strong gains in 2023, especially towards the end of the year, amid growing optimism over the Indian economy. Equity market investors turned richer by 80 lakh crore rupees in 2023 alone. Third quarter of GDP data also showed Indian economy was buoyant. It grew at 7%, vastly outpacing its global peers as manufacturing activity picked up and consumer spending in the country also picked up. There was optimism, sometimes even irrational exuberance. But after BJP's victory in the 3 out of 5 states that went for elections this year, markets clocked a record high. There was also general anticipation over the 2024 general elections, driving strong gains in Indian markets since late November. Will the momentum continue, and what can you take away from 2023? We'll discuss all of that. With me is Suyash Maheshwari here in the studio.
Shweta.
Hi Suyash. Also joining us is Ambareesh Baliga, independent markets expert. Before I get you, Ambareesh, let's quickly first get in Suyash. Suyash, you know, it's been a wonderful year for Indian equities market and a year that made many people richer by as much as 80 lakh crore rupees. Run us through what were the key highlights of Indian markets in
Certainly,
2023?
Shweta. As you rightly pointed out, it was a phenomenal year, and I think to truly appreciate how the year went by, let us look at the timeline. You know, we started we kicked off the year on a muted note. Both January as well as February were negative months for the market, and even up till April of this year, we were one of the worst performers among global peers. You know, we were in the negative, we were in the red, whereas other global markets such as your S&P 500, such as your Nikkei, such as your Hang Seng were rallying somewhere around 10 to 15%. But that's when we turned a corner, and how? You know, not only did we manage to pare all those losses, but by July, we were at record high levels. Now, the market did turn a bit choppy after that, but you know, a strong recovery was seen in November and December, which by the way were the best months for the market in the whole of 2023, and we have in fact once again scaled to record high levels and pretty much hitting them and moving into uncharted territory on a daily basis. Now, you know, with 20% or thereabout surge in 2023, the Nifty index has delivered positive annual returns in 8 years in a row now. Now, this is unprecedented. No other market has been on a bull run this long, and Indian markets have pretty much outperformed, and that's where you see the conviction between the market participants. And you know, if you think that 2023 was a great year for the headliners, it was the broader markets that did the hard labor. They moved, and they delivered phenomenal returns to the investors. Now, Nifty Mid Cap 100 in 2023 surged by about 46%. And this was the best year for the mid-cap index since 2017. The small-cap index, on the other hand, surged about 55% or so. And this was its best performance since 2021 and the third best year for the index in over a decade.
Absolutely. What a phenomenal set of returns there from Indian markets. Ambareesh, I want to straight up jump into what can our retail investors take away from the year that was? What were, according to you, the highlights of the year, and what does it tell you about what's going to come in 2024?
See, I think the main highlight of the year for the Indian markets was, irrespective of whatever is happening across the globe, Indian markets can only move one way, and that is upwards. I think that's the takeaway for this year. But unfortunately, the first-time investors will assume that this is the way the life goes on in the markets, and they will never correct. And it's very much possible that, I mean, they will be the ones who will get caught on the wrong foot when the markets correct, because we have seen, we have looked at the history that markets do correct, and when they correct decently sharply, especially after a move like this. Like you rightly said, we have seen 7 years of upward move till date, but this is the first time we are seeing an 8-year continuous upward move. So I think 2024, when we get into that, I think we should be a bit careful, because don't really expect the sort of a move which we have seen in 2023 to again continue throughout that year, because it's an election year also. And after nearly a 20% return, expecting again, I mean, I think most of the people will still be expecting a similar sort of a return or more. I think that could be a bit difficult and we could have a disappointment. And one more data point I would like to give you is that in 2023, I mean, we have what about 2,500 shares being quoted in the market. I mean, scripts being quoted in the market. 600 stocks have been multi-baggers. And when I say multi-baggers, I'm talking of 2x to about 10x. And out of the 600 stocks, I mean, all these are, I mean, these are not penny stocks. When I talk of these 600 stocks, I mean, I picked up stocks which are quoting about 20 rupees, not below 20 rupees. And I mean, about 50 stocks out of these are in the top 500. So I don't think the markets have really given this sort of a return. I mean, in the broad market, just not the index, the broad market, I mean, till date. So
Okay.
Now,
yeah,
Mr.
but then,
Baliga, yeah.
yeah.
Now, you were talking about this brilliant rally that we have seen play out in the broader markets, but still relatively large caps were the laggards. Do you think they will play catch up in 2024?
I mean, they could play catch up for a while in 2024 because, see, I mean, I don't think there'll be a sort of a budget rally, because this will be I mean, it will not be a full-fledged budget. It will be more of a sort of just filling up till the elections are over. And post that, we will have elections. I mean, it could be earlier than May. That's what the talk is there on the, I mean, like in the market. And generally, I mean, despite the fact that most of the people are decently sure as to the incumbent government can come back, but elections being elections, I mean, could be uncertain. I mean, we have seen that happening in 2004. So before the elections, maybe a month and a half, 2 months, you'll see a lot of volatility in the markets. And that's the time you'll see that the markets are not really going anywhere. And that could disappoint a lot of investors who have been used to seeing huge returns, I mean, week on week, month on month. I think that's the time, I mean, that could be a testing time for
Okay.
most of the investors.
All right. And before we move on, you briefly mentioned that valuations are currently not justified, and we also touched on how sometimes the exuberance has also been irrational in the past couple of months. Given that, what are the chances of profit booking in the near term? You said markets are going to be volatile. That is still elections, but what's your medium to long-term outlook over the year?
No, I mean, see, if you're talking of long term, as far as India is concerned, I don't think you can really go wrong. You can't be bearish on India. And again, I mean, this time is my assumption is based on the fact that BJP comes back post elections with a much better majority. Because if that's not the case, I really don't know as to what sort of a I mean growth we could see going ahead. But
Okay.
then, assuming that they come back, I don't think you can go wrong in India. I mean, over a longer period of time. But then, as of now, the valuations are a bit too stretched, and I mean, I don't really see too many people booking profits. But then, at some point of time, people would be forced to book out, because if you have the markets correcting beyond a certain level, because we have seen a 300-point correction on the Nifty, and that just lasted, I mean, for a day or two. But then we don't know as to how the people will react when, in case the markets correct by 800,000 points, which is not too much looking at where the Nifty is. I mean, a 4-5% correction is nothing much, but most of the people will be seeing that sort of a correction for the first time, and you don't know as to how they will react to it. Whether they'll consider that as I mean, a buying opportunity, a discount sale like what we saw a couple of days back, or whether they'll panic. Because in case they panic, we could see much lower levels.
All right. It will all depend on whether people will continue to remain cautiously optimistic, whether they panic. Hopefully, there'll not be a panic. And obviously, markets factoring in that BJP will perhaps continue to reign in and be in power in 2024. That is the expectation. And now that we have set the ball rolling, let's understand the nuances of the markets. Suyash, I remember you and I sitting and discussing how Indian markets performed globally. While in Asia, they may have charted a glorious path for themselves, as compared to their global peers, such as in the US, in the Europe, it seems like we sort of missed the performance that some of these markets had over the year.
I mean, sure, Shweta, but we did well this year, but so did the global peers, right?
They did better than us.
They did better. Some of them did better than us. Like Japan, for instance, that was the best performing global market, like global market. Among all the major markets, Japanese stocks rallied by as much as 30% this year, and this is in a year, Japanese stocks were long undervalued, so they pretty much are turning a corner. They have turned a corner in 2023. Interestingly, US markets have also outperformed us. S&P 500, the broader index, which is considered a proxy for US stocks in general, that has rallied by about 25% or so, whereas Nifty has given returns of about 20% or so. And interestingly, this is in a year when the country saw its worst banking crisis in over 100 years since the Great Depression. Interest rates are at a decadal high. We have been talking about US falling in and out of recession. What they are now calling it is called rolling or self-correcting recession that US has been slipping in and out of for the entirety of 2023. And still the markets have performed, and how? A brilliant rally, especially if you see all three indices have performed really well. The Nasdaq was up about 45-46%, and the S&P 500, as I mentioned earlier, was rallied by about 25%. Now, Mr. Baliga, coming to you, considering that there are a lot of headwinds for the US, do you think that the rally that we saw in 2023 is a bit suspect?
No, I mean, see, I will not call it a suspect because clearly liquidity was flowing in, and this rally was more of liquidity driven than anything else because, I mean, there was no major change as such. I mean, as far as the policy is concerned, or if you look at the performance of the companies in India, I mean, like there was not so much of a huge surprise that the markets had to move up like this. So I would believe it was more liquidity-driven rally, and then it was a more of a self-fulfilling sort of a prophecy that money is coming in because of which the markets are going up, people are again making profits, and because of which again the liquidity comes in. But I mean, the only fear is that I mean, if this cycle breaks for whatever reason, I mean, it can be a black swan event or I mean, like something which we don't know as of now, as to in case any sort of a news which hits us, and then because of which the market corrects, then this whole I mean cycle can actually reverse because this is purely based on liquidity, and if the liquidity disappears, then you can have a major correction because whatever said and done, if you're talking of the valuations as far as the mid cap and the small caps are concerned, I think it's just a too high. And like the difference is huge now between the large cap and the mid caps. I mean, the gap was, very high on the other side. Now this has gone, a bit too high on the other extreme.
Now, Mr. Baliga, one of the things that we have been talking about, at least for the last 3-4 years, is that how the flows will start moving out of China and into India. Now, that has not really happened now, is it? And even the Chinese market, that saw a bit of a downturn in 2023. It was down about 4.5% or so. What's your take? Can we finally see the inflows from China to India?
See, I mean, we can see inflows as long as the valuations are decent. At these stratospheric valuations, I really don't think, you'll have a huge amount of flow coming in from FIs. I mean, surely they'll be investing, no doubt, because end of the day, they need to invest in markets which are doing better than others. But then it will not be a huge flow, like the sort of retail flow which we saw in the last 1.5, 2 years. Like the way I see it is it could be a marginal flow, no doubt. And the day you have the markets correcting, I think they'll be the first ones to move out.
The end of 2023 and Indian markets have done extremely well, making people richer, the investors richer, and of course giving us a lot to talk about here on News 9. We are discussing Indian markets performance vis-a-vis their global peers, and Ambareesh Baliga continues to be with us on the show. Ambareesh, before we move on to another theme that we've identified here, I think one question that remains for a lot of people, global watchers who are keenly eyeing India as its market, every week on week we hear of one agency over the other calling India a bright beacon of hope for a lot of investors and for entrepreneurs, of people who really want to invest. India is the country to go to. Now, while Chinese markets and the investors from China may not have come to India in the capacity and in the momentum that we were thinking they will in 2023, as far as 2024 is concerned, sir, among major developing economies, where do you see India being placed when it comes to investment opportunities?
See, when it comes to investment opportunities, surely India will be at the top, at least among the first two or three. But at the same time, like I've been saying, valuations will also play a major role. So unless we have a decent correction, I don't think India will really see huge amount of institutional flows or the foreign flows, because whatever said and done, I mean, if you I mean, if you're coming below the large cap and the blue chips, I mean, you're talking of valuations of what, about 60 times, 80 times, 100 times. I mean, I don't, I really don't see money coming into that part of the market. But yes, I mean, if you're talking of the large caps, there could be some decent amount of flow out there. But I don't think that really will, I mean, move the markets too much higher from where we are right now.
All right, and then since we are talking about where the money will come in, let's also quickly get in my colleague Udisha Shrivastava, who will be joining us on the show. Udisha, you know, one of the key understanding perhaps that many investors would like to draw on is which sectors to invest, which were the top performing sectors. I think that would be a question, and we kept discussing this, Suyash, but I think two sectors that stood out for us, one of them was realty.
Definitely. And you know, I think realty was one of the best performers. Udisha, please.
Right now, yes, it's time to look at the best and worst performing sectors of 2023. And realty sector, as you correctly mentioned, realty sector rallied 81.35% in 2023. And just to give a little bit more context, as per an Anarock report, in 2023, 4.8 lakh housing units were sold in India, and that too in just 7 cities. Let's come to the next sector which performed very well in 2023. That was the auto sector. It rallied 47.63% in 2023. And one more detail about the auto sector is that the sector delivered an exceptional performance from 2014 year, and in 2023 it rallied 47.63%. Let's move on to the next sector, Nifty FMCG sector. This sector rallied 29.01% in 2023. Another sector that performed very well we have is Nifty Pharma, and the sector is rallying very well on the back of the COVID cases that we are witnessing in India in this year. So the sector rallied 33.61% in 2023. And another sector that was the best performer this year was Nifty PSU Bank. The sector rallied 32.30% in 2023. Now, these were the best performing sectors. Now, it's time to talk about the worst performing sectors. One of the worst performing sectors we had was Nifty Bank. Now, the sector rallied 11.78% in 2023, but recently we had a RBI report which said that, you know, the NPAs, the non-performing assets, were at a decadal low. The report also mentioned, this RBI report that we are talking about also mentioned that the bank frauds were at a 6-year low.
Absolutely.
But on the contrary,
the asset quality is at a decadal high, bank frauds are at a 6-year low.
A 6-year low, but yes, the sector rallied that much. Talk about the Nifty IT sector. The Nifty IT sector rallied 19.42% in 2023, and JP Morgan earlier had predicted that 2023 would be a washout year for the IT sector. Now talk about Nifty Metal. The Nifty Metal was amongst the worst performers here, and it rallied 18.66% in 2023. Let's move on to the next sector that we have is Nifty Media. Nifty Media rallied 19.88% in 2023. So these were the best and worst performing sectors of the year 2023.
And Shweta, like, even though Risha was giving us a wrap of the worst performers,
worst performer,
double-digit returns. The worst performer, Nifty Bank, it's up 12% this year.
12%. I'm like, the worst performers are also best performers. Ambareesh, I'm going to drop a very crude analogy here, but often, people around me said, and these are non-traditional, people who invest money in the markets. They often said, you look around and you see what's pumping in, what's the momentum, where's the momentum, and you invest money accordingly. You see more cars cars on the road, you invest money in auto. You see more construction happening, you invest money in realty. But I mean, look at the momentum. What brilliant performance when it comes to, you know, some of the
Absolutely.
best performing sectors.
See, Shweta, I mean, what happens is whenever you have a bull market going on for a while, and we've seen the sort of returns which we have got in a year like 2023. So whenever people make money in the markets, the first thing they do is upgrade themselves. I mean, they buy cars, they buy a new house, they travel, they spend on white goods. And again, in the last, I think, 2 to 2.5 years, what we also noticed is a lot of CXOs and the senior employees of most of the companies have, I mean, their wealth has gone up decently well because quite a few of them have got ESOPs, and that's where the wealth was created. And the first thing they do is buy a house and buy a better car. And this clearly has shown up in the real estate sector, where we have seen, I mean, more than affordable, we have seen luxury housing, like doing extremely well. And I mean, most of the projects are sold off within 2 or 3 days. So this is where the money is coming in from. So as long as money is being made in the markets, you'll see this sort of a demand coming in, no doubt.
Now, Mr. Baliga, I mean, we have had some great guests, including you, and we have had some good advice. But I think the best advice in 2023, I think, came from PM Modi, who in August had recommended investing into, you know, PSU stocks. And the index, the BSE PSU index, since August 11, when the recommendation of the PM came out, has rallied by about 37% or so. Now, on a more serious note, can this rally perhaps continue into 2024 as well?
No, it can continue for a while longer because whatever said and done, the PSU sector overall, maybe other than defense has already run up, I mean, quite a lot since the last 12 to 15 months, defense and railways. But the rest of the PSU space, I think the valuation was decent compared to the like rest of the market, because normally in the markets, whenever you look at valuations, it is relative. So compared to the others, the valuation was quite decent. And I mean, across, I mean, we've seen the sort of order flows which has been happening for the most of the PSU companies. And again, there's a huge difference between how the PSUs were even 10 to 20 years back and today. I mean, most of them are now much, much better in terms of professionalism. I mean, I'll even go to the extent of saying that some of them could be even better than some of their private sector peers. So it was high time that they got their dues. And I think 2023 was rightly the year of PSUs, because that's the time when people really recognized them and started buying, investing into them.
Mm-hmm. Absolutely. Year of PSU, year of realty, year of auto, year of everything, come to think of it. What a brilliant year it was. But while we're at it, let's also quickly take a look at top gainers and losers on the D Street in 2023.
Yes, Shweta. So in the Nifty 50 basket, Tata Motors was a top performer. The stock has in fact doubled investors' wealth in 2023. And you know, this is amid a broader rally in the auto stocks. In fact, Tata Motors is the only stock in the Nifty 50 basket that has given multi-bagger returns in 2023. Bajaj Auto was another stock from the auto space, albeit from the two-wheeler space, that delivered this year. And you know, two-wheeler stocks in general, they, Shweta, they have had a phenomenal year, and they have benefited from the burgeoning middle class in India. And you know, even if we talk about the entire segment, that is moving towards premiumization. And a word on Bajaj Auto. Bajaj Auto has come out this year and they are planning to launch the world's first CNG powered motorbike in 2025. So perhaps more leg left to this rally in Bajaj Auto. Now, you know, there were, as we were talking about PSU stocks, the two other stocks in the Nifty gainers for 2023 were NTPC and Coal India. Again, phenomenal set of returns. And Larsen & Toubro, engineering and construction company Larsen & Toubro, also turned a corner in 2023, delivering returns of about 67% in 2023. Among losers, there were only two stocks that ended in the negative, namely Adani Enterprises and UPL. Now, Adani Enterprises, as we all know, corrected and gave away a lot of the gains after the Hindenburg report came out in January 24 of this year. But you know, the stock from the 52-week low, it has rallied by about 180%. So phenomenal recovery. We are just 25% shy of the 52-week high. So, you know, that just shows you how confident investors are about the India story on the whole and the role that these companies, Indian companies, can play going forward and drive the economy higher.
All right, and while we're at it, I'm not going to go into specifics of Adani per se, but Ambareesh, if I were to ask you for your top stock picks for 2024, and then from what all baskets will they be, could you help us understand what will be your choices?
No, earlier I've been saying, the sectors which I expect to perform in 2024 clearly is auto, specialty chemicals, pharma, FMCG, and the white goods sector as such. So in auto, I will surely look at buying Maruti. Tata Motors at this point of time seems a bit expensive, but then I'll surely buy that on a correction. And the other one which I'll pick up from the auto space is TVS. So these three would be my pick from there. Specialty chemicals, I would look at picking up stock like Deepak Nitrite. Although it's rallied a bit in the last few days, but still, even at these levels, it's worthwhile. SRF, would be the other one. In pharma, I would surely look at Dr. Reddy's and Lupin and Sun Pharma. Although I've been suggesting this for quite a while, they have done decently well, but still, I think there's a decent amount of upside. When it comes to white goods, I would look at a stock like Voltas and Whirlpool. Whirlpool has, in fact, corrected a bit in the recent past. I think that's a good buying opportunity. So I think these are the ones which I'll continue to look at buying.
All right, and let's move forward perhaps with what comes in by the way of primary markets action, the IPOs. Shreya joining us here on the broadcast. Shreya, let's talk about the primary market action, the IPOs, and they picked up some momentum towards the end of the year, and you've been tracking IPOs here for us at News9. Run us through what were the top IPOs of the year.
So 2023 has been the year of IPOs, with this year seeing the fourth highest listing of the numbers of IPOs that have come. 2023 saw 58 main board IPOs with 176 small and medium issuance, with a number of 176 number of medium and small numbers of issuance. Along with this, interestingly, the data also shows that an EY report shows that India emerged as a global leader in the number of IPOs that were listed in 2020-23. Along with this, in December alone, 12 companies that got listed in December raised around rupees 8,900 crore, which was the second best in 2 years. Now, interestingly, what the data shows here is that in 2020-23, the IPO size fell by 17% as against 2022. However, what we could see here is that the issue size was smaller, but the returns that were posted was tremendous. In 2020-23, 40% gains were posted as opposed to a 29% loss in 2020-22. Now, when we look at the IPOs that have flooded in 2020-23, some of them which have created a frenzy has been Tata Technologies, Erda, Moti Sons Jewelers, DOMS India, which have made waves in the Indian market. Now, small size issues were among the highest demand, with at least were in the highest demand, with Plaza Wires being subscribed over 160 times, as well as Moti Sons Jewelers being subscribed over 150 times. When we look at large issue sizes like Tata Technologies, which was subscribed over 70 times, followed by Erda and GSW Infrastructure. Now, when we look at the number of gains that were posted and the returns that were given by these IPOs, Erda Technologies posted over 200% returns.
Wow.
As well as there were 5 other IPOs which posted over 100% returns.
Okay.
Now, out of the 58 mainboard IPOs which were released, 4 IPOs were subscribed over 100 times, which were Erda gave a 218% return, as well as Sai and DLM, which gave a 152% return. Tata Tech, which was among the most popular IPOs that there was, it gave a 140% return from the issue price.
And Mr. Baliga, certainly a year for the IPOs, but of all the IPOs that our colleague Shreya mentioned, which one do you think, or at least, if you think there are more than one, that can be, long-term wealth creators? Baliga?
In fact, I've not really looked at it very closely. So, for me to tell you as to which are the ones which will really give you long-term wealth creation opportunities, I could be the wrong person. But then, what I would like to say is most of these IPOs have given you that opportunity of that bump up on listing. And I think most of the people who have been applying for the IPOs have been looking for that bump up to sell because I mean, what we have seen this time is one after the other. Most of the IPOs have given you that 50% sort of return or 100% sort of a return, or maybe more. And this also, puts a question mark as to, I mean, how could the merchant bankers go so wrong? Because typically, I mean, they try to give the best sort of deal to the company coming out with an IPO. And here we are seeing even something like a IRIDA. I mean, you had the issue at 32, it opened at about 64, 65 levels, and then you see it doubling from there. So, I mean, 4x in a month. I mean, that's beyond imagination. So, I mean, surely there's something wrong. I mean, I don't think one should really be holding on to those IPOs which have given you 3x and 4x. I mean, I think it's quite prudent to book out, as soon as you get this sort of returns.
And so, as you rightly pointed out, it looks like at least the market is taking some sort of cognizance of these high IPO valuations, because this year we had more number of IPOs, but the ticket size was smaller. Now, from what I believe, I think SEBI is also working on the framework regarding valuations. But what's the way out? How can investors assess these IPOs, and how can they compare the valuations vis-a-vis other listed peers?
I mean, see, if you I don't think anyone really looks at the DRHP. I would say 99% of the IPO investors are not even looking at DRHP or any of the other documents which are available. Because most of the people are looking at what is the grey market premium based on that, and at the same time looking at the sort of number of times oversubscribed to invest invest in these IPOs, because they are not really looking at long term. I mean, they know that it will open, say, 25% higher or 50% higher, and they're just looking at that bump up. But then, if you're really seriously looking at these IPOs, I would suggest that one should look at the ones which have corrected decently well from the higher levels. I mean, you look at the performance. Performance. When I talk of performance, I'm talking of the financial data. You look at the promoters. You look at the sector, and in case it seems cheaper than the rest of the stocks which are quoting in that sector, could be a good time to buy it.
All right, I think we'll leave it at that. Ambareesh Baliga, thank you very much, sir, for joining us for one last time here on this show. We look forward to having you back in 2024 once again.
Thanks, Shweta, and wishing you and all your viewers a very happy and a prosperous year ahead.
Thank you, sir. To you too. Wishing all our viewers a very, very happy and prosperous 2024. That's the wish from all of us here at Newsline. Thank you very much for watching.